Most people have a notion of coinsurance from health insurance, which means that you pay a certain amount, the company pays a certain amount, but on commercial property it's completely different. There is no advantage to coinsurance. It's not something that you do or don't do, it's something that's built into the commercial policy for most policies. With the policy, if you have a building and we choose an amount to insure it for, the policy says that you have to insure it to a certain percentage of what it would cost to actually rebuild that building. So if we have 90% coinsurance on a policy and we have a $100,000 building, it means that we need to insure it to at least $90,000. If we decided that we got a good deal on the building, maybe we thought we would be able to rebuild it for a little bit less, and we insured it for, say, $45,000. When a claim comes, the insurance company would come out and the adjuster would say, well, it looks like if we had to rebuild the whole building, it would cost us about $100,000. To fix what you have wrong and damaged, we would need about $10,000 for this claim. But with the 90% coinsurance, we need at least $90,000 of coverage on this policy. We only have 45. 45 is half of 90, so here's $5,000, half of your $10,000 claim, minus your deductible, which might be $1,000 or more. So here's $4,000 for your $10,000 claim. So it can really affect partial claims, which are 90-some% of property claims. Rarely does the whole building burn or something happen. Usually it's a partial claim, and it has a huge impact on how your claim is settled and how much you actually get. The solution is to make sure that you have your building insured to the proper amount to actually rebuild it. Not just insured to the coinsurance percentage. We don't want to be at 90% or 80% or what amount of coinsurance is on the policy. We want enough that if the whole thing does go, we want to make sure that we have enough insurance to rebuild the whole thing and any additional coverages or expenses rather that would happen at that time if you need to make changes for widening doorways to make them handicap accessible or different ordinances and laws that might be applicable at time of rebuilding. One other option to avoid coinsurance penalties at time of claim is to have agreed value coverage on the policy. It doesn't get rid of the coinsurance, but what it does is you and the insurance company agree at the time that the policy is written that you're meeting the coinsurance requirement on the policy. So even if things change, construction prices go way up, drywall prices double, it doesn't matter because at the time the policy was written, you and the insurance company agreed, yes, we are insured to value, that the coinsurance requirement is met and therefore it isn't revisited at claim time. There's never one size fits all. It's so unique and customized to each person. There are so many coverages built into policies, there are so many coverages you can add on to policies, and everybody's needs are always different. And there's different ways to get to the ultimate goal of having the amount of coverage that you need and want at the lowest cost possible. And protecting and doing things that you can along the way, not just to ensure the possibility of something happening, but what can we do to keep that from happening? And it's that total view that really is important and allows us to get a customized program for each client.